Financial wellness. Reach out to them for advice at 855-DON-GINO. And now back to your hosts, Don Getling and Gino Franti.
Well, we're not going to be as good as the second half as the big game last week. I can't say Sue.
I know, Sue. And it was a really amazing game.
Yes.
It was super.
Yes, but our second half is great because we have one of our favorites back on the show again with always great information, especially right now. How many of you are excited about where the Dow is? Remember, it was around, 6,000 a few years ago. It was super, super low.
And I remember
now it's at 20.
I remember 14,000 being a big deal. That was like
yeah.
one of the big ones, right? Now that's like just a shadow in the past.
So we don't throw stuff out there we don't know what we're talking about because we got the master here, Mr. Chris Ingram with Ingram Financial Solutions, our chosen financial extraordinaire who handles our own money and basically part of APRG. And a good dude, and actually, I just saw we see you at the gym all the time. You got it covered, buddy. You're always.
I'm everywhere.
So Chris always comes on as calm, cool, and collected. You'll notice that he doesn't get excited about much. Thank goodness. But he is competitive. He is disciplined, and that's really what you want in your financial planner. Because a lot of times you think it's how much return can I get on my money, but also there's a factor that we're going to talk about today is how can I make sure I keep my money?
Yeah, no. And that definitely is a big factor. And, fear and volatility is where you make big mistakes. And the fact that Chris doesn't make emotional decisions because of the views that we've talked about, the way he plans for you. He's not a stockbroker. And maybe we can talk a little bit about the difference between a stockbroker and a financial planner.
Mm-hmm. Sure.
That's something we can open the doors to today.
That's a good one, Gino.
Well, it's a little different, right? A stockbroker wants to trade. That's
Why?
what they do. Because that's how they get paid. Trade to get paid. But, I know that Chris is not like that because every once in a while I'm like, can we trade something? And he's like, no, you're good. And I'm like, well, I want to trade something. He's like, you're good.
Oh, we had a few, Chris, that we made some moves on we thought would be good in the long term, but we were both looking at going, well, let's hang on.
Yep.
Hopefully they'll come. And they did.
Ride it out.
There's a couple of them that came back pretty strong, and they were looking a little iffy, but we're like, it's just news. Mm-hmm. You have one little report which gave us a buying opportunity, and we'll talk about that. Believe it or not, the volatility in the market, if you're working with a true professional and you're not trying to freaking be a day trader and figure it out yourself, you may have a lot of opportunities you didn't think of. And especially with the administration, new administration coming in, it's going to add some volatility. And a lot of you are not going to know what can hit you, especially with Twitter these days, right?
So give us a snapshot of what Twitter does for you, Chris.
I'm not on Twitter, so I avoid a lot of that craziness. But you touched on a number of different things in that little
we're just
opening
setting
segment.
everybody up.
So
We're setting you up that we got a lot of great info. Yeah.
We'll just be quiet now.
Yeah, pretty much. So going back, I was actually in New York when the Dow hit 10,000. I was training at the time for Morgan Stanley, and I remember them coming out in the streets, and they had Dow 10,000 hats that everybody was putting on, and everyone was so excited, and it was just another number. We're 100% above that now. So getting too emotional or excited about this, Dow crossing over 20,000, you just got to go back to work the next day and figure out where do we go from here? What is the plan going forward? And so there's a lot of things that can happen now that we've crossed 20,000. We could go higher. We could go lower. And that's the uncertainty that keeps everybody guessing and needing a professional that they can talk to. A lot of that comes back to knowing what your goals are and what your time frame is. If you're somebody that thinks you need this money that's in your investments within the next 3 to 6 months, you might be thinking, hey, I've made some money recently. Maybe I should pull some money off the table, get a little bit more conservative because there could be a pullback coming. If you don't need this money for the next 30 years, who cares what happens over the next 6 months?
Yeah, I always say that when the market tanks, like, are you retiring tomorrow? And I'm like, no. I go, it's paper money. It does not count.
Right. And I've actually had people come to me and say, I'm retiring next year. Should we pull all of my money back to conservative investments? And I sit down with them and I go, so are you going to start taking money out of this account next year? Well, no. I got pension. I got this and that. Well, when are we going to start pulling money from this account? Well, we're probably another 10 years away from me pulling money from the account. I was like, so who cares that you're retiring next year? This money is still invested for the next decade before we're actually going to need this money. So no, we don't move to conservative assets. So understanding.
But normally somebody would probably feel that they need to because they're just retiring, I'm going to protect it. But like you said, if they're not needing it, you have an opportunity to possibly make it grow.
Right. Well, and it's not to say that we don't adjust the allocation to be slightly more conservative.
Sure.
Now that they're retired, and our time frame has shortened up a little bit to when we need the money. But going to, well, I should just bail out and put everything in conservative investments now that I'm retired is a silly, idea, because the reality is this money is going to be invested for another decade. So it's very important to understand your goals, your time frame, your risk tolerance, and what are you looking at, and what are you trying to do with this money that you have invested? Are you trying to take advantage of opportunities, or are you letting it ride long term? What is the goal?
So I got to go back to the big game, because you just touched on the same thing, right? That very conservative move is kind of what happened to the Falcons.
Yep.
They had a big lead, and they said, well, let's just protect it.
Mm-hmm.
We're going to retire. We won the Super Bowl. Let's just protect it. How'd that work out?
Yeah. Well, it's funny. I use this, an analogy a lot. Dale Earnhardt, one of the greatest race car drivers in history, got himself into the Daytona 500, and instead of trying to win the race, he was trying to block out other people so that his son and his other driver had the potential of winning that race. It was something uncharacteristic of that driver. It ended up putting him into the wall, and a seatbelt issue ended up ultimately, it cost him his life that day. But at the end of the day, diverting from the strategy, being more conservative, trying to block, sometimes is not the best strategy.
No,
It gets you into trouble.
And sports are a great reference for that, because it happens in everything. Same thing. Ayrton Senna, the day that he went out and ultimately got into the accident and passed away, had a difficult time that day because he had lost a friend, and he was uncomfortable that morning. And he was not as aggressive, as confident as he usually was. And so whenever you make a change, you got to make sure that you're going to make that change for a great reason.
Yeah.
Right? And make
Most
sure
of
you
my
have a
accidents
professional.
were not racing; it was actually practicing. Racing, you're so focused, that you don't hurt yourself as much. So stay focused.
So the big thing right now is what you're hearing and what you're seeing on the media is we've crossed over to new highs, book your profits, move things to the sidelines, get more conservative. We don't know what the president is going to do. Everything is up in the air, and there's all this cause for concern. And so people are starting to say, hey, maybe I should just, book some profits, move my money to cash, get more conservative. And so, again, it's going back to understanding what your goals are. If you're not needing this money anytime soon, that may not be the best strategy. There's some reasons to believe that the market could do fairly well this year. So if you end up booking those profits, moving off to the sidelines because of something you read from the media, you could miss out on a very good year. I saw people do it with the last Fed rate hike and the Brexit fear. Everybody wanted out of the market at that time, and a lot of people didn't want to get back in because they thought, well, now the election's crazy, and this is all
2 weeks
crazy,
before the
and
election, everybody pulled into cash.
I just want to be out. I don't know what's going to happen. And, the S&P was up 10% last year. You missed out on all of that. So some of this is just to take a deep breath and understand what you're looking to accomplish. And I think alluding to what you were saying with the Twitter, there are some things that could create quite a bit of volatility this year, big knee-jerk reactions, some pullbacks. If you have cash sitting on the sidelines and you're looking for an opportunity to invest it, maybe it is wise to keep that cash kind of over on the sidelines right now and wait for one of those knee-jerk reactions, wait for a pullback to put that money to work, because putting money to work over 20,000 on the Dow is maybe maybe the market's a little top heavy at the moment. But long-term investors, moving all your money to cash right now just because of something you read in the media is silly.
Well, like you said, it went from 10 to 20. What's to think that over the next 10 years it's not going to go from 20 to 30?
Absolutely.
Yeah.
Yeah, we will see 40,000.
Yeah.
Okay, you heard right here. We're going to see 40,000 Dow.
It might be 100, but we'll see it.
Yeah.
It's going to take a long time.
Yeah.
But no, we'll get there.
Yeah.
You never know. All right, we're here with Chris Ingram with Ingram Financial Solutions. He's been on our show many, many times. Good friend. Handles a lot of our clients and our dough for a reason, because he's a solid, sound advisor. We talk about that all the time. When we come back, we're going to talk about some of the things that can affect the market. Again, Chris is going to allude to more opportunities potentially because of that, how the current administration can affect the markets, and why you need to work with someone like Mr. Chris Ingram so you don't have to
It's past the ulcer.
Past the ulcer. That's
Past
it.
the ulcer, yes.
And Chris will take that ulcer on. All right, you heard it right here on the Don and Gino Real Estate and Finance Show. We'll be right back. Don't go away.